Hey everyone, welcome to another video. So in this video, we'll try and understand 5 important GST hacks or tips that every small business owner must keep in his or her mind before they start out in their business journey. Now, definitely when you hear about the word GST, it could feel like someone's already turning up the heat. But with the right kind of approach and with some moderate amount of patience, you'll be able to handle GST with a lot of confidence. So therefore, in this particular video, we'll understand 5 such GST hacks or tips that's important for a small business if you want to have a low drama kind of a roadmap and approach GST with a lot of confidence. So we'll discuss firstly what scheme you need to opt for, whether you need to go for the normal scheme or the composition scheme under GST. Today, definitely, it's rather become mandatory that you go for a GST compliance software to get the things done and be compliant. You also have an option today to go for a simplified registration scheme or a normal scheme. Input tax credit or ITC is something which is most talked about in the GST Act, and we'll talk about the benefits in this particular video. And definitely, if you are running a business of trading where you have import of goods and then export of goods, or you are an exporter of software solutions or other solutions, then you can definitely think of capturing the benefits of refunds. First things first, and that is choosing the right GST scheme. So under GST, you have definitely the regular scheme and the composition scheme. So when you're starting your business journey, definitely in the first 2 years at least, you will not have massive turnover. And therefore, you can think of opting the composition scheme wherein if your aggregate turnover is not exceeding 1.5 crores, then you can opt to pay GST at just 1% instead of the normal 5 or 18% under the regular scheme. So if you're a small business, you're starting off only and you don't have heavy turnover, at least in the first couple of years, you can think of opting for the composition scheme wherein you end up paying GST at only 1%. You can definitely opt out of the scheme once you cross the threshold limit. The filing frequency of returns under the composition scheme is only quarterly when compared to the monthly scheme under regular. That is, if you have a turnover limit of not exceeding 1.5 crores, you can still be under the quarterly filing scheme. So this is the first hack. The second one is getting the right GST software. Like I said before, today it has become almost mandatory that you go for a GST compliant software because one, your software will be updated with the latest GST updates and compliance requirements and all that. Your software will be automatically linked and integrated with the GST portal. With a few clicks, you'll be able to file a return. It will be automatically integrated with the e-way bill and e-invoicing portal and all that. When compared to a normal automated accounting software where you don't have the GST module integrated in it, will be quite difficult when compared to a GST compliant software. So go for GST compliant software, and that is the second hack. Third, you have the simplified registration scheme. Today under GST, you have the normal scheme and you have the simplified registration scheme, wherein you put out an application for registration in just 3 days. In just 3 days, you get a GST registration done. Definitely, your monthly GST liability should not be more than 2.5 lakhs. So if you're a small business owner and you don't have massive turnover, at least in the first 3 years, and therefore your GST liability will not exceed 2.5 lakhs. If that's the case, then you go for a simplified registration scheme wherein you get registration in just 3 days. The beauty about this scheme is that there's no verification by a third party or an officer. Based on AI, based on tech and your risk profiling and all that, you'll get a registration in just 3 days. When compared to a normal registration scheme where it takes almost 30 days for a certificate to come in your hand. Fourthly is the benefit of input tax credit, which is a famous concept in the GST Act. Now, the simple understanding about ITC or input tax credit is that whatever GST you buy or you pay on your purchases, that GST you'll be able to use it as a credit and set off against your GST on the sales. So if you have incurred 180 rupees on your purchases as GST and on your sale it is 360 rupees, you can use that 180 on your purchases and end up paying only net 180 to the government, 360 minus 180. The set of benefits is available. If you have a GST registration, you'll be able to claim set of benefits. Definitely when you are a proprietor and you're starting off your business, you may end up giving your GST number for each and every purchase, maybe your air tickets, maybe your gym membership and all that. But you need to segregate as to which expense is your business expense and which expense is your personal expense. And only the business related expense can you take it to the pool of input tax credit and set off. For example, if you buy a t-shirt and there's GST on it, you've given your GST number, they charge you GST, you're paying GST. Well, a t-shirt is more inclined to a personal purpose than a business purpose for your business. And therefore, you may not end up claiming input tax credit or take to the pool of ITC for the GST paid on the t-shirt. But when you compare that with a laptop purchase or a computer purchase, 80% of the time you may be using the laptop for your business, and therefore you can claim input tax credit on that laptop GST which you on the GST for the laptop that you paid at the time of purchase. You also have the concept of ineligible credits or block credits, which is actually defined in law. You have a set of 10, 12 items on which you can pay GST. That means you can give your GST number, but you cannot claim credits. It's something called as block credits. For example, your gym memberships, your spa memberships, even the purchase of a motor car, even the purchase of a vehicle. If you buy it irrespective of your business or for your personal use, you cannot claim input tax credit on the GST that you pay for the purchase of the vehicle. Moreover, if you have not paid a supplier in 180 days, that is, you buy a certain item for your business, you take the input tax credit, but you have not paid that off in 6 months' time, you are bound to reverse the input tax credit which you've already taken. So those conditions are there in the GST Act, especially the ineligible credits is something that you need to consider. But otherwise, you need to segregate your business expense and your personal expense and only claim input tax credit for the GST you paid for your business related items. The last hack is definitely circulating regarding refunds. If you are an exporter and you have some accumulated input tax credit, that means you kept on buying items for the purpose of exporting, and on those items you have paid GST, you get accumulated input tax credit. So therefore, if you are an exporter and you're exporting out items wherein there is no GST that you pay initially because you have entered into a bond or an LUT. So if you've entered into a bond or LUT, you end up paying no GST. So that is one item. You can definitely claim the refund of this because you have accumulated ITC. You cannot set off against the liability because you don't pay any liability. You can very well claim the refund of this accumulated ITC, number one. Number two, if you have exported with the amount of GST, then you can very well set off against your input tax credit. The remaining amount of GST that you pay to the government, if any, after set off, you can get a refund. So to summarize, specifically for exporters of goods or services, if you have accumulated input tax credit and you have already entered into an LUT for the purpose of your export, you end up paying no GST. Whatever is lying accumulated, you can get a refund of it. Or if you're an exporter where you pay GST on your export sales, you can set off your input tax credit, and whatever remaining liability that you have paid, you can get a refund of the same from the GST department. Well, these were the 5 important hacks or tips that every small business owner must keep in mind if you really want to start off by eliminating the fear of, or minimizing at least the fear of GST. Well, I hope I was able to make things clear in this particular video. If you like this video, you could show the support to us by hitting the like button. If you want more videos like these on a regular basis through way of notifications, you could also think of hitting on the subscribe button. Till then, I'll see you guys in the next video. Take care and thank you.